The Big Short's Michael Burry and Understanding Put Options. This is Ken Boyd with the Accounting Accidentally Substack channel. So, what movie uses humor to explain a complex topic better than any other film? I actually think it's The Big Short. I'm sure many of you have seen it. The base of the book by Michael Lewis, the film explains how a small group of investors bet against the mortgage market in '06 and '07, and in their research, they discover how flawed and corrupt the market is, and they make huge returns when the market collapses. A lot of stars are in it, including Christian Bale, who plays a former doctor named Michael Burry. And Burry places a huge debt that the mortgage market would crash, and he made a personal profit of $100 million and a profit for his investors in his fund of $700 million. Well, he's back. In August of 23, Yahoo Finance reported that Michael Burry bought put options on the SPDR, SPDR, SPDR S&P 500 ETF, which tracks the S&P 500 index, and put options on the Invesco QQQ, which tracks the NASDAQ 100. So what in the world does all this mean? Well, first of all, let's define what an exchange-traded fund is. Investopedia says it's a type of pooled investment that operates like a mutual fund. It tracks a particular index, sector, or commodity or other asset, but unlike mutual funds, it can be purchased and sold on the stock exchange like an individual stock can. So what's the S&P 500, which is what I'll use as my example? It's a stock market index tracking the stock performance of 500 of the largest companies listed on the stock exchanges in the U.S. Okay, with that ground being laid, how could you bet on the price of the S&P 500 index going down? You buy puts on the index. So let's talk about puts. To buy a put option, what it means is the investor pays a cost, called a premium, for the right to sell a specific amount of units of the index at a specific price. As mentioned above in the definition, ETF units are similar to mutual fund shares. So let's use the word unit rather than shares. As of 8/24/23, when I looked it up, the ETF trust unit was trading at a net asset value of $436. So let's say you have the right, you pay a premium for the right to sell 100 units of the ETF trust at $430. $430 is referred to as the strike price or the exercise price. If the value declines to $415, you buy the units in the market at $415, you exercise your put, and you sell the same 100 units at $430, you've earned a profit of $15 a unit. Well, what if the value of the ETF increases, say to $450? Well, in that case, it doesn't make sense to exercise the put and sell it at $430 when you can sell it in the open market at $450. So the put doesn't have any value. The put buyer may let the option contract expire worthless and simply lose the premium paid for the option. So you made a bet, the market went the wrong way. All you lose is your premium, which is great because you don't lose 100 shares of stock, that much value. You only use the premium that you paid to control a certain number of shares, a certain number of units, which is the benefit of options. So to sum this up, the buyer can profit with the price of the underlying investment. In this case, the ETF units declines. Burry is using the same strategy for the Invesco QQQ, which tracks the NASDAQ 100, which is another basket of stock index, another stock index. So he's doing it on two different stock indexes. One more thing, really important. If you exercise a put and sell the underlying security, you must make delivery of the security to the buyer. You have to deliver the security. And if you don't own it, the price you may pay is infinitely high, meaning that the loss when you purchase the security that you don't own could be unlimited as well, which gets us to the term putting it to someone refers to this concept. So Burry's strategy works if the ETF units fall in price, and that's when you exercise the put and sell the unit. So food for thought. If you'd like more information on accounting and finance, you could go to my Substack, accountingaccidentally.substack.com. Thanks for watching.